Good afternoon, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity outlook. So, beginning with bullion, international and domestic gold and silver prices eased this week as the US Treasury yields remained elevated after the latest core CPI numbers from US showed stickiness in the inflation side of things and strengthened bets of a rate hike in the month of June as well as in the month of July. Prices also eased amid speculation that the Fed could project a hawkish dot plot for 2023 and possibly project no rate cuts till the first quarter of 2024. Looking ahead for the coming week, the key trigger again will be the Fed meeting outcome from scheduled later in the day. Again, the markets are factoring as a status quo on rate hike this month after the headline inflation eased. But if there is another surprise from the Fed, we can see a solid correction for gold and silver prices in this week. Of course, the language and the dot plot projections will be also a key driver of the markets in a short run. After the Fed meeting, of course, we have the ECB meet as well, where another 25 hike is expected by the central bank there. And finally, on Friday, we have the Bank of Japan meeting, where also the new central bank governor is expected to keep rates steady and possibly provide more stimulus to the economy going forward. So I think after the meetings, we have several key data points in the coming week or so, and that will be a key trigger. Apart from the data, apart from the incoming data, we see that the Fed speak after the meetings will be also a key driver for the prices. So markets will remain range bound. The biasness will depend on the outcome of the central bank meetings going forward. On the charts, we feel domestic MCX August futures support is at 59,100 and a break below will pull prices to 58,300. On the upside, a key hurdle is at 60,200 and a break above will push prices to 60,600 or even higher from there. For the international market, key supports are at $1950 and $1915, and on the upside, the key hurdle is at $1980 and $2020 for this week. Moving on to crude, crude prices remain under pressure and continue to struggle both domestically and internationally as demand concerns overshadowed Saudi's plan to cut output further. Weak numbers from top consumer China also aggravated demand concerns for the market and kept prices under pressure. Both benchmark also fell this week after a media report indicated that a US-Iran nuclear deal may have been imminent and would have resulted in more supply from one of the largest producer. However, prices did recover after denials from both countries during this week. Additionally, markets also recovered from the bottom side for the week after the dollar eased further after the headline inflation remained slightly subdued, which could see Fed remaining status quo, but we have to wait and watch going forward. So for the coming week or so, we need to see markets remaining or breaking a clear level of $75 on the NYMEX side to witness further bull run for the crude prices. Fundamentally, the key trigger will be the Fed meeting tonight and the outcome from the latest dot plots and the language from the Federal Reserve. Apart from the Fed meeting, we also have the inventory data from EIA, which also project slightly elevated inventories for the US side of things, that can cap further upside. So any upside can be met with further selling for the crude oil prices in the coming week or so. On the charts, we feel $75 will remain a key resistance. $66 on the downside remain a key support for the NYMEX crude prices. Finally, on the base metal side of things, copper and most other base metals rebounded this week on hopes of stimulus expectations from China. Data from the country remained weak with the factory output and inflation from the country also easing further. So this actually prompted the Chinese central bank into action after they lowered the short-term lending rate for the first time in 10 months, and that pushed the prices higher. Looking ahead for the coming week or so, the key trigger will be the Fed meeting outcome, and the ECB and the Bank of Japan central bank meeting outcomes over the next 2 to 3 days. But apart from that, we also have data points from China, like new yuan loans, fixed assets investments, and industrial production, which will be the key drivers of the markets, at least in the short run. So all eyes will shift to that, and if the data remains upbeat and there has been a lot of speculation going around that China will do or take further steps to support or boost their economy, and if indeed that happens, we can see some uptick for the base metals in the coming week or so. On the charts, what we need to see a clear break above 735. A clear break above 735 will push prices to 750, possibly even higher. But if not, we see markets moving back down to 715, 710 levels, and a break below 700. Indeed, this time we can see prices even lower, possibly testing 685 going forward. So it will depend on the incoming data and what the Chinese authorities do going forward in the coming week or so. So that's it from our side. Thank you very much for listening. Have a pleasant day ahead. Thank you.